Okay, so now time is 7:09. It's about time to start. Before I start, can just check with everyone. Can you guys see my video, the screen sharing, as well as hear my sound? If can, just type yes in the chat. At least I would know all is working well. Okay. Thanks everyone. Okay. Okay, so thanks everyone for joining us today for this webinar. And before I start, quick introduction. I'm Jeremy. I'm a dealer in the I'm a contract for differences dealer. And today with me is Minghan, who is also under the dealing desk for contract for differences. Okay. So later you guys will see his face as well when I pass the time to him. And so for today's webinar, we will be sharing about the stocks that have done Singapore proud in light of the upcoming National Day next week, as Singapore turns 57. So for our fellow non-Singaporeans, tonight, in case you are not aware, every 9 August we commemorate National Day in Singapore, and it is also the day where Singapore became independent from Malaysia 57 years ago. Okay, and so this year we will be diving deep into two stocks that are the flagship of Singapore, and they are DBS and SIA. We believe that they will benefit from the reopening economies, and will continue to put our Singapore flag globally. Okay, next slide. Okay, so okay, so as usual, before the start of the webinar, just a quick disclaimer. So this webinar does not serve as a professional financial advice. To take note, and for actual professional financial advice, you should still seek advice from a financial advisor. Okay, after doing some sort of financial assessment. Okay, next slide. So here is the outline for today's webinar. So for me, I'll be covering the current overview of Singapore's economy for the first half of 2022. And then I'll dive deep into DBS as well as SIA. Okay, and if you stay till then, Minghan will be sharing with you guys a good deal. And I believe most of you will be interested in that good deal as well. So stay till that portion. Then Minghan will also go through the fundamental valuation as well as technical levels for the two companies, and then share also some of the different investing or trading strategies that you guys can utilize. Okay, next slide. So for the overview of Singapore's economy for the first half this year, so it has been a flat year thus far. So if you look at the left-hand side, it shows the performance of the Straits Times Index versus regional indices, such as the Jakarta indices, Hang Seng Index, as well as the Kuala Lumpur Composite Index. So the STI was down about 9.1% in the second quarter, and after reversing all the gains that was chalked up this year, the index was flat for the first half. So with a 0.7% decline in the first half, the STI was the second best performer in the Asia Pacific region, just after the Jakarta Composite Index. And if you look at the the table on the right hand side of the screen, the STI also easily outperformed some of the other indexes, such as the MSCI Singapore Index, as well as the MSCI Asia ex-Japan Index, as well as the MSCI World Index. Okay, so as such, despite having a rather flat first half of 2022, we think Singapore offers a more defensive positioning to ride out potential storms after seeing how well it held up as compared to the other indices. We believe that strong balance sheets, the potential for M&A, as well as a highly vaccinated population are likely the reasons driving this defensiveness. Okay, next slide. So the largest drags for STI for the first half were banks, the consumer sector, as well as the industrial REITs. Okay, firstly for banks, despite rising rates that will benefit banks' interest margins, the recession worries actually hit the sectors quite hard, particularly the banks. And secondly, reopening proxies also suffered, such as Genting Singapore as well as Stats. And thirdly, REITs as a whole actually underperformed, apart from a few hospitality REITs such as Escort Trust, CTR Hospitality Trust, and Far East Hospitality Trust that did well in the first half. And that was mainly attributed due to the enthusiasm for the post-COVID-19 travel that took hold in Asia and globally. So we attribute the sector's underperformance largely due to the aggressive US federal funds rate hikes that have already taken place. And we believe it will still continue. There'll still be a few more rate hikes for the next 1 year perhaps. Okay, next slide. So overall, the economic conditions in Singapore still remain resilient for the first half. So firstly, manufacturing is still holding up. So if you look at the manufacturing activity in terms of the industrial growth, it is still hovering at 9% this year. Okay, if you can refer to the most left graph. So this is actually, even though it's slower than last year's 14%, but it is still far stronger than the pre-pandemic level of about 2%, which is easily more than 3 times more than the pre-pandemic levels. So despite the slowdown as compared to last year, manufacturing activity still remains very robust as compared to the pre-pandemic levels. So secondly, if you look at foreign investments, they are back to record levels. So FDI into the country have recovered sharply, and they are close to the record levels seen in 2019. So yeah, you can see refer to the graph in the middle. So this would mean that there are actually more jobs and more economic activity, which is a positive for the Singapore market. And lastly, jobs are ample. So you can refer to the graph on the most right. So jobs are ample in Singapore. Employment is surging with record vacancies, as you can see from the graph. And another ratio we look at is the number of vacancies to unemployed, which is currently at 2.7 vacancies for each unemployed citizen, and it is the highest since 1997. So I would say job conditions in Singapore still remains strong. Okay, next slide. So the first company that I'll be sharing is DBS, as I mentioned earlier on. And it is a household name, and I believe most of you would already have a bank account with them, or used to have one with them, or simply even have utilized their services before. So well, for me personally, my first ever bank account was with DBS. So yeah, and so DBS is one of the few Singapore companies that have successfully grown its influence on the financial landscape throughout Asia and the world. And they also won some of the most prestigious best bank accolades from the world's leading financial publications. So DBS Bank was previously known as the Development Bank of Singapore Limited, and they were founded in 1968, and is headquartered in Singapore. It is the largest bank in Southeast Asia. Currently, their total assets total about 491 billion. And so DBS also provides retail, SMEs, corporate, as well as investment banking services. And it operates through a few business segments, such as the consumer banking segment, or what they call, or you can call it the wealth management. Also the institutional banking, as well as the treasury markets and other segment. So DBS Bank is well established and is well established and represented in not just the Southeast Asia, region, but also the global banking sector. Okay, and DBS Bank is also seen as the safest bank across Asia, and it's actually, I would say, the benchmark for regulatory compliance. So much so that the MAS actually granted DBS the crypto license to offer digital payment token services. Okay, and they are only for info, they are the only Asian bank that MAS has granted a license to. Okay, moving on to the next slide. So now let's talk about the present situation for DBS company. Okay, in terms of their financial results. So DBS in their recent financial business update, DBS actually reported strong net profits of 1.8 billion Sing in the first quarter of 2022, and it's also the second highest on the record. So on a year-to-year basis, net profits are down 10%, as you can see on the screen. And however, on a quarter-on-quarter basis, net profits are actually up 30%. So the strong profits were mainly due to the 4% increase in the net interest income, as the 8% loan growth offsets the 3 basis point net interest margin decline. However, for their fee income, as you can see on the screen, it fell 7% year-on-year due to a weaker market sentiment affecting the wealth management and investment banking, which more than offset increases in other activities such as loan-related cards and transaction services component. And for their non-performing loan ratio, or NPL, it remains stable at 1.3%. However, DBS actually held 0.2 billion Sing above the MAS requirement for general allowance, the general allowance reserve, or what we call the bad debt reserve. So I think that's quite important to take note also. Okay, moving on to the next slide. So what you're seeing on the screen is the comparison of the three local banks, their first quarter 2022 performance. And this table is to actually gauge how well DBS has performed relative to its peers. Okay, and those boxes that are highlighted in green means that the bank performed the best for that particular metric. So overall, we can see that DBS flagged the best amongst its peers in terms of revenue or total income, the NPL ratio, as well as the return on equity, ROE. So, however, for this webinar, I won't be going through in depth on these three banks comparison, but just provide a glimpse of what we have actually prepared. Okay, we actually prepared a bank comparison report that Minghan will be sharing more later on how you can get it. Okay, moving on to the next slide. Okay, so in terms of the outlook, so last week during the FOMC meeting, the Federal Reserve actually enacted the second consecutive 0.75% interest rate increase. So as it tried to tame down inflation. So currently the Fed funds rate is at 2.25%. And actually based on the Fed's dot plot, we believe that there was by the end of 2022, the Federal Reserve, the Fed funds rate will hit 3.4%, and by end of 2023, it will hit 3.8%. So, okay, so if you can look at the graph on the right-hand side, it shows the correlation between the US Fed funds rate and the Singapore's 3-month SIBOR, also known as the Singapore interbank overnight rate, interbank offered rates. Sorry. So as you can see, the SIBOR has a very strong correlation and tracks closely with the US Fed funds rate. And in fact, the Singapore overnight rate average, or SORA, which is the preferred benchmark in pricing loans in Singapore, has seen an increase from the pandemic low of 0.2% in October last year to about 1.78% this year, July. So it's quite a huge increase of about 790% for information. So in our view, banks gain bargaining power as liquidity is tightening due to higher interest rates and quantitative tightening. So thus, we think that they will benefit from the net interest margin expansion. So DBS is also the most sensitive in the banking sector to higher interest rates due to its high CASA ratio, which is about 76%. And it is the highest among the three Singapore banks, the OCBC and UOB. So as such, further rate increases will be beneficial to its net interest margin and earnings. And DBS is also positioned well to benefit from the reopening of economies and the digitalization of finance in Asia. So with its focus on becoming the first local Singapore bank to offer a trusted gateway to access the digital assets and cryptocurrency economy, we think that DBS has shown that it has the flexibility to adapt to new changes and the trust of regulators and customers to achieve it. So furthermore, shareholders of DBS, they also enjoy high dividend yields. I think just now on the table, I actually illustrated the yields across the three banks. In general, all three banks provide a dividend yield of above 4%. So if you're looking for a flexible yet a stable bank with a high dividend yield, I think DBS Bank should be in your radar. Okay. So in terms of risk, just want to share one particular risk that perhaps investors are quite concerned about, which is the China's COVID-19 lockdown as well as its mortgage crisis. Okay. However, in our opinion, their involvement in the domestic business activities of the domestic company is quite small, and DBS actually do not have exposure to any residential mortgages in mainland China. So I think this risk is quite minimum. Okay, moving on to next slide. Okay, so the next company, which is also another household name that I believe most of you have heard of or even taken their flights before. And it is the Singapore Airlines. So Singapore Airlines Limited was actually founded in 1972. And it is Singapore's flagship carrier and one of the region's largest airline in revenue and carrying capacity. On top of that, SI is also a certified 5-star airline globally because of its quality of its airport and onboard products, as well as its staff service. So SI in general provides air transportation, engineering, pilot training, air chartered, and tour wholesaling services. Okay, and they actually have operations covering Asia, Europe, Americas, Southwest Pacific, and Africa, and flies to about 60 destinations globally. So SI operates under dual brands. Firstly, the premium carrier SIA, which links Singapore to the rest of the world, and the other brand would be its wholly owned subsidiary and the low-cost regional carrier Scoot, which mostly serves Asia and Australia. And on top of that, SIA also owns some stakes in SETS and SIA Engineering. So the COVID-19 pandemic, which began to spread in 2020, it actually resulted in quite a lot of unprecedented restrictions on international air travel. And there were many countries restricting people from traveling in and out of the country. During that period, SI passenger traffic has suffered by, I think, 97.9% due to the global restriction on international traveling. And SI reported a net loss of 4.3 billion in 2020. However, fortunately, the disruption also provided a unique opportunity for the carrier to expand, for Singapore Airlines to expand its carrier's global presence, and the strong cargo revenue managed to cushion the huge drop in passenger traffic. And on top of that, since 2020, SIA also did a series of fundraising, raising to a total of about 22.4 billion through a combination of uh, mandatory convertible bonds, rights, as well as secure financing and sale and lease back arrangement. So all in all, SI's strong revenue from the cargo as well as the capital injection from the shareholders actually allowed SIA to survive the pandemic crisis. Okay, moving on. So similarly, now let's talk about the current situation, the present of the SIA's financials. So recently, more countries have lightened their traveling restriction and made it easier for one to travel, resulting in a sharp rise in demand as Singapore also fully opened its borders to fully vaccinated travelers since April this year. So in SIA's recent FY23 first quarter update ending June, the group revenue actually rose about 58% quarter on quarter and about 202% year on year. And in terms of the group revenue breakdown, the strong growth in tax revenue on back of the 126% growth in traffic and 34% jump in the load factor to 79%. So cargo revenue decreased as demand for air freight dropped due to the pandemic-related lockdowns in China. And however, the decline in cargo loads were mitigated by higher yields. Okay, next slide. So moving on to its operating performance, the operating performance actually had a record high first quarter on the back of sharp improvement in travel demand. So in terms of net profit, which is what you are seeing on the screen now, overall for the first quarter FY 2023, the group actually reversed from a net loss to net profit. And with the lightening of restrictions, there was a higher air demand and SIA managed to recover some losses made in the past 2 years. So we believe that these reversals from net loss to net profit were mainly due to 2 reasons. So firstly, due to a doubling of the RPK or revenue passenger kilometer demand in the first quarter from the as compared to the previous quarter, as well as the passenger load factor or PLF rising from 49% to 82%. So the SIA group available seat kilometer capacity actually also rose from the previous quarter 52% to this quarter's the first quarter's 66%. And we believe for the next 2 quarters there will be further recovery. However, also need to take note that a future reopening of China's borders will also likely have to fill in the remaining gap. Okay, moving on to the next slide. So now for the outlook for SIA, Singapore was the first among the region to open the VTL in September 2021. The Asia Pacific region has continued to reopen with less travel restrictions. So SIA may rebound faster than expected and is likely to outperform the other competitors in the region. So as most of the world is opening up from COVID-19 lockdown, SIA actually expects the passenger capacity to reach 81% of pre-pandemic level by the end of this year. And they also expect a higher demand for the northern winter operating season, which is from the end of October till the end of March next year. So travel demand is also expected to remain robust in the near term as we head into the year-end holiday travel period. Okay, so we can expect forward sales to remain buoyant for the next 3 months up to October. So, however, the Northeast Asia region still remains a drag. So, based on SIA's statistic, the Air Asia traffic recovery in the recent months has actually been mainly driven by the Americas Europe and Southwest Pacific routes. And for the Northeast Asia, which includes countries such as China, Taiwan, and Japan, which collectively form about 20% of Changi Airport's throughput in 2019, there's a bit of recovery that still, for example, for China, which is still sticking to its dynamic zero COVID policy, is still in a largely lockdown state today. Whereas for Japan and Taiwan, fortunately, they are gradually opening up their borders, but at a rather cautious pace. So for Japan, they have reopened its borders to travelers on guided tours from 10 June this year, but still remains closed to individual travelers. Whereas for Taiwan, has loosened its borders control recently, allowing entry by international travelers from 15 June, however, with a cap of 25,000 visitors per week. So in time to come, we still believe that the rest of the world will eventually open up, and there will be more flights to many countries heading back to the pre-pandemic levels. So cargo demand from Asia has been recovering, and cargo yields are expected to remain higher than pre-COVID levels in the near to medium term, as air cargo capacity still remains tight on key trade lanes to and fro Asia, particularly between Europe and Asia, amid the Russia-Ukraine conflict. However, also do take note that any changes to the COVID-19 situation in China may also impact the ongoing recovery in the country's export volumes. So all in all, some of the key sector catalysts we believe that will help to boost the SI's share price will be possibly the positive news flow of Singapore air travel recovery, and secondly, the faster pace of border measures relaxations in Japan and Taiwan, and lastly, any possible shifts in the stance on treating COVID-19 by China. Okay, moving on. So some risks for SIA. So inflationary pressures, including higher fuel prices, still remain a concern. So high jet fuel prices may dampen the long-term travel demand. So on the back of global inflationary pressures and the supply concerns due to the Russian-Ukraine war, crude oil prices has been sharply rising, and fueled by a widened crack spread, the increase in jet fuel prices was even steeper. So while we think that we believe that the strong pent-up air travel demand being fulfilled currently and in the upcoming months will be relatively more inelastic to higher IFS. Nonetheless, a sustained high jet fuel price in the long run may still dampen the air travel demand. So the second risk would be the interest rate hikes and slowing economic growth in many countries around the world, including SIA's key markets. And we think that there are key risk factors to passengers' travel recovery and air cargo demand. However, on the brighter note, direct earnings exposure to the rising interest rate is rather limited. For instance, firstly, SIA was in a net cash position as of June 2022, meaning they can easily pay off their outstanding debts with their cash position on their balance sheet. Secondly, out of the gross amount of debt outstanding, a substantial portion, if not all, is based on a fixed interest rate. And lastly, for the part of gross debts on fixed interest rate, only a limited portion or none are due for payment in 2022 to 2024. As such, we think that the rising interest rate have a limited impact on earnings. Okay, but also need to take note that despite the limited impact, the rate hike will still have some impact on the valuations of the SIA. Okay. And thirdly, the risk would be a possible recession impacting air travel demand This is quite straightforward. And lastly, a more infectious or more fatal COVID-19 variant could lead to a rollback of the global economic reopening. So to sum up, nonetheless, the group actually emphasized in their most recent business update that they will keep tight rein on their costs and reinforce their operational and financial foundations. So SIA's transformation efforts will help the group to continue to remain nimble and flexible, and maintain cost discipline, and be ready to seize any revenue and growth opportunities, just like what they did during the pandemic period. Also, like to share that we think that there will be rather speculative sentiments toward SIA in the near term, and it will be quite high. And we do not rule out the possibility of SIA trading higher, maybe due to positive sentiments triggered by likely exceptionally strong earnings in the next two quarters, or any positive news flow of Singapore air travel recovery. So as such, we see that SIA as a trading play for the short term also. Okay, so that's all for my part. I will now pass my time to Minghan, who will be showing you guys the good deal that I mentioned earlier on at the start. Minghan.
Okay, thanks, Jeremy. Right, guys, can you see my screen and hear my voice? If so, can you please put a letter Y in the chat box, please? Just doing a sound check before we continue. Thank you, Mr. Yap. Thank you, Billing. Thank you, David. Thank you, KH. Thank you, Andrew. Thank you, Patsy. Okay, thanks, guys. All right. So just now, Jeremy mentioned about the oil, how it affects the SIA. So just want to share a bit, some advertisement here, which is my company, my department is actually having this oil CFD promotion. So if you trade oil, 500 contracts, you'll get a $50 Grab transport voucher. Very easy to hit, like 250 buy, 250 sell. That's already 500 contracts, and I think the cash outlay is 2,000 plus per transaction. So it's still a reasonable promotion. If you are trading oil, why not just get this goodie that we have? Just now, Jeremy shared about the DBS. So I'd like to check with you guys, hearing from him, which one are you more interested in, DBS or SIA? Which one would you prefer to invest in? So can I, if you choose SIA, put SIA, choose DBS, put DBS. Just want to get some sentiments, judging from Jeremy's presentation. I see. Okay, so more towards DBS, right? Yeah, personally, I also look at DBS, and I realized that DBS, other than DBS, we also have OCBC and UOB. So Jeremy and I will be doing a in-depth analysis on this the comparison report, and we will be publishing it in our Telegram channel in the coming week. So this is the QR code and link to the Telegram channel. Do join us so that we can send you the report in the coming week. Before moving on, right, I think let's answer some questions. Jeremy, can you answer Neoli's question on the OCBC?
Okay, let me see the question. Okay. Maybe for Q&A, we keep it for the end. Then we one shot answer all the questions. So that I think that would be easier.
Okay,
Yeah.
sure.
Minghan, then you continue your part first.
Okay, thank you. Okay, so moving on. Just want to share on the DBS first, like how we do valuation. There are fundamental valuation and technical analysis. So these are so I'll give you two different perspectives, and then you can gauge are you paying too high a price, or are you paying at a good price? Because at the end of the day, no matter how good the fundamental may seem to be, price is what you paid, right? So if you look at this chart here, I put the terms at the respective lines. There's this book value per share, BVPS, that is the purple line. So BVPS, if it's rising, is good because the bank has more assets than liabilities. Comparatively, they are growing it, right? Assets growing more than the liabilities. That's why it's on an uptrend, as you all can see. If you all can see my BVPS, can you please type for me BVPS so that I know we are all looking at the same chart? Because this is important because it talks about valuation and what would be a good price that we can consider. Thank you, Billing. Thank you, David. Thank you, Marjorie. All right, great. Thank you. Thank you, thank you. Okay, thank you, Chun Chong. Okay, so all of us can see. So if you look at this, right, book value per share, basically you take the book value divided by the total number of shares, and that is the what you get. So how do I get the price? So if you look at the top, the high, this is the high, the highest that if you take book value per share, you multiply by the book value, book value per share. Yeah, you multiply, and then you find, oh, what is a reasonable price? What is a reasonable price right now? So in the past, the historical high, the highest book value so far for the past 10 years, all right, is around, from the chart here, you realize, how come the prices touch the red line, it come down? Prices touch the red line, it come down. Is it because it's the technical analysts do that? It's not, right? Because the technical analysts, usually they'll just look at price. They don't look at like book value per share. Who looks at it? The fundamentalists. So if they know that, this is the highest price, considering the high book value per share, I multiply what is the fair price. So this is the high. So when it's at the high, it will come down. This is the low. So you realize that for the past many years, past 10 years at least, the prices seldom go to the low. The low is the green line. The prices seldom go to the low. And the blue line is the median. So this is the weekly chart. So you notice that the prices seldom go to the low. It seldom stays very long below the median. So therefore, looking at this, where would you consider getting into DBS? Would you consider getting in at the high, the red line? Would you consider getting in at the blue line? Or would you consider getting in at the green line? Can you type the color of the line? Blue. Okay, thank you, Billing. Thank you. Okay, thank you, Andrew. Thank you, Hock Xiao. Thank you. Okay, so those of you who said blue, yes, that is also a good point of entry. Those of you who said green, I'm not sure whether you ever have a chance to enter, maybe once in a lifetime, right? So it's very rare. So a fair price that we can see from the historical price, because price is what we pay, is slightly below the median or at the median. Okay, so far so good. So next, I will look at the technical analysis. So technical analysis, my purple lines here are the support resistance lines. So the support, the resistance, so these are key levels. It's not a hard and fast rule that price must go to 32.04 and then come down. It's not a hard and fast rule. By using this technical analysis, at least we know at which area is a point to consider. For example, if you look at 30, the prices hover around there before it goes up. Right. So what you can do now is you can look at these key levels, you can take them down. You look at how price respond. Look at how price respond when you go to these levels. Just to share with you, I got this chart last week when I was preparing for this webinar. So there are many ways to invest and trade, right? There are many different people with different psychology. So if you're an investor, what can you do? If you're a trader, what can you do? If you're an investor, you can dollar cost average. Dollar cost average means every month, I think this stock is strong. Every month, I just buy a bit. Every quarter, I just buy a bit, a fixed amount, dollar cost average. You just average. You don't really look at the charts. Second way is you combine FA and TA. FA is fundamental analysis. TA is technical analysis. You combine them together, and then you invest. When they reach the key level, you see how it moves, and then you, if it bounces up, then that's when you get in. So these are ways to enter. And you can also invest based on technicals. So if you are in our Telegram group, right, Benjamin, who is our other dealer, is also a technical analysis expert, he shared this thing called the RSI divergence. So if you look, the prices are always coming down to the same level on the chart, the black line, prices coming down on the horizontal black line, but the RSI, which is a technical indicator, is rising up. So there is this hidden strength, hidden momentum, and that's when you realize that after this, it breaks up. So these are investing based on technicals. Of course, those who trade with the trend means for uptrend, right? If I want to buy uptrend is higher high, higher low, higher high. So in this case, there is no higher high, there is a higher high, but there's no higher low, right? So you need to see a zigzag, higher high, higher low, then that's when you trade the trend. So at this point of time, traders will not enter. Traders who trade with the trend will not enter. But these are the various strategies that you can learn to use. And if you join the Telegram group, Benjamin teaches this every week. So this is the chart as of last week. You realize the divergence. And then you also realize that there is this black line here. What is this? This is called the 200-day moving average. Do you realize that the prices are rejected there? Is it because the whole, or is it magic that it goes to the line and it comes down? Actually not true. But it's to me, I feel that technical analysis is also a little bit of a self-fulfilling prophecy. You look at TA, I look at TA. You look at 200-day, I look at 200-day, because this is what professionals are using. This is what my traders are using. The moment they go up to 200-day moving average, everyone thinks that, at this point, I short. At this point, I sell. At this point, the prices cannot go up. So that's when people start to take profits. That's when people start to sell down. That's when people start to short. That is the reason why it is a self-fulfilling prophecy, and this is the reason why it works. And this is as of today. I got it around late afternoon when I was preparing for today's webinar. So you realize that this is a chart of DBS. The levels are the same. Yeah, I keep it consistent. And then you realize that 200-day average, it is still, even though the other moving averages are ticking up, the 200-day average is flat and it is presenting a resistance for the past few days. So why is it so? My take is because it is self-fulfilling, and technical analysis helps you to plan your trade. If you're a short-term trader, it helps you to take profits at certain times. Okay, moving on. Let's talk about the SIA. SIA, Jeremy mentioned that they are not profitable yet, and only recently they started to come up, right? So we have this feature if you are using Poems tool and you're not sure, okay, what is the valuation for stock analytics? You just go to Poems tool, you right click, there is this stock analytics, you click on it, you'll pop up the report with the data that Jeremy shared, right? You can find them in our Poems platform. So if you still don't have an account with us, do open an account with us, and then with my team, with the QQ team. So you open an account, you have access to all these resources, and you have access to us, you have access to our Telegram channel, and that's where we aim to educate our clients so that everyone will win together in the long run. So you can see that SIA, this is a consensus of all the analysts who are following this company. This is a combined consensus that the price is now about 5.58. That is the target. That's the target. So from a fundamental point of view, what our analysts are looking at, you can take a look with our stock analytics. Now let's move on to the technical levels. Jeremy mentioned about the losses during the COVID, mentioned about countries reopening. So these are the two main factors that I believe everybody sort of hear about it. And then you can see some form of speculation, right? Only 1 quarter profit, but prices are moving up very slowly. If you look at the chart here, it's moving up slightly. Why? Speculation. The charting is like a forecast. It's like a forecast of what the market participants expect. If I tell you DBS is going to have good earnings next quarter, you go and buy now. You won't wait until the earnings come out and then you go and buy. So therefore, this is the market is like a forecasting of what is going to happen. So a lot of speculators are expecting that SIA will be going up. But if we are trading with the trend, is this SIA trending now? If you think it's trending, put a yes. If you think it's a no, put an N. Do you think SIA is in an uptrend now? Yes. Okay, thank you, Billy. Thank you, Chun Chong. Thank you, Benson. Thank you, Chun Sing. Thank you, Viva. Okay. Thank you very much for your response, for your participation. Yeah, so I'm doing my best to engage us so that you guys won't fall asleep. Yeah. Thank you once again, thank you for spending your precious evening with us. Yeah, we really appreciate it. We hope that our webinar will provide you with value. So the thing is, if you look at my two purple lines, these are the key levels. See how 551 or 550 keep getting rejected. So would I say it's an uptrend? No, I wouldn't say it's an uptrend. If you look at my lines, right, the moving average on the right-hand side, it seems to be more flat, right? More flat. And then if you look at the lower purple line, about $4.86, $4.85, prices come down and go up. So if you want to buy, what price would you consider? What price would you consider? Can you key in the price? Would you consider 485 or would you consider 550? Thank you, Frank. Thank you, Sherry. Thank you, Billing. Thank you, Vivan. Thank you. Thank you, Chun Chong. Thank you, everybody. Thank you, Toph. Thank you. Yes, around the 485 region, right? So that is a reasonable, because price in the end, cannot emphasize this enough, price is what you pay. So just now I mentioned about Telegram group, just to show you guys, you can join us, it's free. We have definitions, we give you market analysis, we give you stock analysis, we give you education, because we want our relationship with our client to go long. Yeah, we want to be with you in the long run. We want to be there to support you, because it's a privilege. We see it as a privilege to be involved in your financial life. And with your understanding, we don't just give you the fish, we teach you how to fish. With your understanding, you can make great decisions yourself. I have clients who trade very well. Sometimes sometimes we'll talk about trades. So like maybe I'm looking at UOB, some of them are looking at DBS. Yeah, so we can have different views, but yet we understand why we are entering. And this gives them the conviction to follow us. Yeah, this gives them the conviction to place the trade as well. So if you want to be a confident investor, trader, you think you're a keen learner, please join us, because you are my dream clients. So as mentioned, we want to give you as much value as possible. If you have yet to open an account with us, we're the QQ team, that's our code now. So you can scan here, use your SingPass to sign in if you're local. So what are the perks for us to serve you? So we feel that we are brokerage, we have access to many resources like analyst reports. So that's where we come in. You need a certain report, we will go and find it, we'll do it up, we will send it to you. And we also work with various educators. These educators who are at the same time traders, we call them like maybe they are like influencers, if you heard of them. So they are like traders and investors, and we know that they can trade. We know that they are legit. So we always will like partner with them, and through them, we link our clients up with them as well, so that our clients can learn well. So I think last year we had a webinar for our clients with a educator. Yeah, so these are things that you can look forward to. These are also things that we feel that is our selling point, that we would, because we know them, we have all these resources. Do make use of it, yeah, to help yourself become a educated investor. Yeah, even if you are already a confident and educated investor, we are here to support you, like in terms of admin and stuff, getting you better rates, minimize your costs. This is what we do. That's what we do. Yeah. And if you join our Telegram channel starting from today, you will get the FA data that Jeremy shared, but we will go deeper. What do I mean by go deeper? Just now, Mr. Ng asked about the slides, right? Can I have a show of yes and no? Do you think the slides are useful for you? If you think you will want the slides, can you please put a Y so that we know that we're doing good work? Thank you, Vivian. Thank you. Okay, I saw David's question. David, I will answer you. Thank you. Thank you. Thank you. Thank you very much for your encouragement and support. Yeah, so just now Jeremy mentioned a few ratios. I'm not sure if you guys have heard of it before, like CASA, NPL. Can I check, will it be useful if, let's say, we give you the definition of the terms in the report as well? Because initially the report is just a FA of all these three, and then the valuation from the FA perspective, like how I did with the DBS, and then TA perspective, like how I did the DBS. I'll do it all for UOB and OCBC as well, David, if that answers your question. All this will be in the report. Yeah, but I want to add on more value. That means like CASA. Do you know this CASA is basically is current account, saving account, because these are the money that the bank can use to like lend out and stuff. So an NPL, like non-performing loans, how many of the loans are performing, giving them money. Yeah, if you think the definition is useful, right, can you give me a letter D? So at least we know that, okay, let's include these definitions inside, because I know that Jeremy has even more stuff to add in, like NIM, what else do you have, Jeremy? I think you have a lot, right? So we will add all this into, oh, thank you very much. Okay, I see all the D. Thank you, Willie. Thank you, Blockchain. I'll add all this into the report. Okay, Jeremy, please note this down so that tomorrow when we collate, we give our audience the best value that we can. Okay, now let's move on to the next one. Okay, so this is how you can contact us. You can email us. You can call us. 6812155 is only for our clients. Yeah, so please don't call the wrong number. The general helpline is 6531155. 6812 is my line. There's only 10 of us. So if your account is not with us, please don't call us because you'll clock up the rest of the clients. Okay, let's move on to Q&A. Okay, I think Neoli has been waiting for some time. Jeremy, can you answer Neoli's question first before I answer the rest? Thank you.
Okay, Neoli, for your question, from your chart earlier, isn't OCBC better in terms of profits? I believe you are referring to, I believe you are referring to the very first slide where I talked about STI and showing the three banks, the banking sector being one of the largest drag for STI. Yeah, so that relates to the first quarter result for OCBC. So okay, so for OCBC, I think for Q1, how it stand out as compared to the other two banks was probably because of their higher non-interest income. I think due to the higher trading income as well as insurance income. Also, their allowance also fell, I think more than 70%. So I think these factors also help to bolster the results. So however, I think that on the whole, I think as an investor, you should think about which bank has the stronger franchise over the long run, maybe 3, 5, or 10 years horizon. So in that sense, I think DBS will continue to perform strongly and maintain its outperformance versus the other two smaller banks. Yeah. So okay, before I maybe answer more question for David Chong for SIA stock analytics in OEMs V3, it shows 41% hold and the buy is only 25. Do you think it is still a good buy? Okay, so like I said, currently for the actually in general, most analysts currently are giving the aviation sector market weight rating, and that is mainly due to some of the headwinds that I mentioned just now, such as the high fuel costs, the uncertainty in the COVID-19 policies in China, as well as for SIA, I think the Northeast Asia still remains a drag because they contribute quite about 20% of the SIA's revenue, as I mentioned earlier on. Yeah, also not forgetting the aggressive rate hikes by the Fed, which would weigh on the company's valuation. So, however, I think you're asking this question because I say that we think that SIA is a trading play for short term. Yes, I still stick to that because if you look at SIA chart, SIA is quite a volatile counter. That's why we feel that in the near term, if there's any positive news or their next 2 quarters earnings come out stronger, definitely the sentiment will be quite high also. Yeah. Then for Sheng Siong market, from anonymous, I'm not very familiar to be honest. So if you want, I can, cause I'm not very familiar with this counter. So if you want, I can bring this question to Telegram and we can answer your question from there after we did a little bit of research.
Okay, so thanks, Jeremy. So let's add on Sheng Siong maybe to our report also. Yeah. Would that be good, guys? If you think it's good, can you please type a letter G so that at least we know that, okay, not only one person needs needs this, yeah, because to do some form of research, it requires some time. So we just want to know like get a sensing of how many people are keen on Sheng Siong. Okay,
Right,
thank you,
so,
guys. Thank you. Yeah, okay, quite a lot of people. Add that in to the report. Yeah. Okay. Yeah. So next one will be, okay, just now I talked about the price to book value, right? So just a clarification, that means price to book, you multiply by the historical high of the book value, then you get the price. So that's where the red line came about. Same for the median is the blue line, and then the green line is the lowest book value in for the past 10 years, then you multiply by the price to book value, and that's how you get a price. So that is how I derive them. Yeah, so how I derive them, basically I need to do some coding on TradingView. Yeah, if you already downloaded our Poems mobile tree, I think you should be able to access the TradingView within the app if you guys are doing charting. Okay, I see a question on what is your view on the upcoming new listing Linko trade? To be honest, this one I have no idea. If it's a new listing, usually there's not much data to refer to, especially on the charting side of things. Yeah. Okay. Any other questions? Okay, Jeremy and I will be around for the next 1 to 2 minutes. If you have any more questions, feel free to ask. Otherwise, we'll see you in our Telegram. We are having a Telegram live on a weekly basis for the education side of things and also for you to ask further questions. Thank you very much for your time, guys.
Thanks everyone for joining the weekday.
Okay, what is your view on coal stocks, Joe Energy and Golden Energy? Okay, so happened that I have a client on Joe Energy. So we realized that I think a few months back, Joe Energy went up. It went up quite drastically in terms of like stock prices. and then it came down also. So energy is quite speculative. Yeah, so if you are thinking of, Michael, are you thinking of investing or in Joe Energy and Golden? And I think Golden, you mean Golden Agri, right? Are you thinking of investing? Thank you, guys. Thank you, guys. Thank you. Yeah, so Michael, are you thinking of investing or trading the energy stocks? You can feel free to type in the chat or even ask us on the Telegram channel.
Yeah, guys. So you got any questions? No worries.
Thank you, Benson.
You
Thank you,
still
Philip.
can go to our Telegram group and leave it there. Then we will answer.
Okay, so Michael is looking at both investing and trading. So from an investment point of view, now energy inflation is here. Everyone is expecting it to go up, but now it is actually coming down. So if we are talking about it, investing, I would recommend looking at it more from a business point of view. This one we will need some time to do a research. Yeah, but we can give you the tools to do the research if you're keen also. Yeah. Thank you, CK. All right, let's take a look at the earnings and then we'll see how the prices move. I don't have any opinion on dividend payout. Jeremy, do you have any opinion on dividend payout for CK?
For dividend payout, not really, and not much consensus, not much view about their dividend payout.
I see. Hi James. Okay, for the book value per share, I think so. I think it's available free of charge, but you need to code it in. You can either code it in or you can, I'm not sure if they allow you to edit straightforwardly the fundamental data. For me, the chart you see, I coded it myself. Yeah, so it's you can test it out. Yeah. Okay, Michael, you have quite a number of questions. Maybe we can, Jeremy, can we like have a follow up on the Telegram channel, so that our participants can ask so that we can answer them.
Definitely.
Yeah. Okay. Yeah, Michael, we will answer you in the Telegram channel. Yeah. Thank you very much.
Yeah, guys,
for your
we will
questions.
create a post for the Q&A, then you guys can comment on the post in case we missed out any. Yeah. Anyway, CK, just a brief answer maybe for your dividend payout. I think like I said, for the banking sector, they likely benefit from they will book well with the rise Federal Reserve interest rate hike, since Singapore tracks closely to the US rates, and I think it will also help to support the net profits and in terms of dividend payout, definitely maybe some potential upsides as earnings increases. Yeah. Okay, so if no more questions, right? I think Minghan and I will end the webinar for today already. It's already 8:32. We don't want to hold you guys back any longer.
Thank you, CK.
On the weekday night. Yeah. So yeah, thanks for everyone for joining us today. Yeah. See you guys next time. Bye bye.